Hey guys, Greg McLeod. I'm the founder and CEO of the Elite Traders University. And what I want to do is take a couple of minutes quick to share with you how to trade the retail sales number. Now, the retail sales is very important to actually show us the strength of the U.S. economy. And we know that's been battered by COVID, by a long winter, polar vortex. And so we want to see what that January number looks like and how we can position ourselves in the currency market to take advantage of whatever the number actually says, whether it's going to be strong or weak, what it is, and how it can help us to determine what we're going to trade. So let's go ahead and go to the charts. And let's get right to it. We want to take a look at the euro. Now, the euro is the most widely traded currency in the world, and it's considered the anti-dollar. I mean, it came into existence to be traded in 1999. It was created as a counterbalance to the US dollar. So when the euro is moving up higher highs and higher lows, if we look at a dollar index chart, we'll see the opposite. We're moving in the opposite direction, okay? So what I'm looking at though, as we have seen this upward movement in the euro, that we are coming up against some resistance here. We're in the 120-103 area, and so now ordinarily in most countries, and this may be a little counterintuitive for most people, when the economic number is good, the currency usually goes up. Okay, so we have, let's say we take Australia for example. If we have great retail sales in Australia, great employment numbers in Australia, what will happen is the Australian dollar will go up. However, for the US dollar, it's a little bit different because the US dollar has a bond market. That bond market and will attract capital, and you need US dollars to get access to that bond market. People run to bonds when there is either some type of financial unrest, geopolitical unrest, like the global financial crisis of 2008, or if we have some type of a war or some type of instability, war, famine, any type of geopolitical earthquake or something bad, or missile goes off somewhere, people run to the US dollar for safety. And then they run into they use those dollars to get into the bond market. And the bond market goes the opposite direction of the stock market. So good news usually means the dollar sells off and other currencies go up, like the euro, the Australian dollar, and the British pound, the New Zealand dollar. So these will go up. However, when we have weaker data here in the United States, the dollar actually benefits from that. And that's where a lot of traders get messed up, because they think, oh, good number, I'm going to buy the US dollar, right? And then what happens, we have a good number and then the dollar sells off. However, in this case, we're looking at the retail sales number, and we can look at before we even dive into that, I want to go to my market heat map, which is our our all-purpose tool for not only finding what's the short-term trend direction, but also be able to look at there's a bunch of tools, trader tools. I'm going to look at the economic calendar, okay? And the economic calendar will tell us what's going on for tomorrow. We can go ahead and click that. We can scroll it down, and we can see what's going to happen for that Tuesday. I usually like having only the high impact numbers to show up. And we can see that we have retail sales coming out at 8:30, and we see that the previous number was negative 0.7%. We look for an increase to 0.7 is the forecast, okay? Now, we've had a lot of all kinds of obstacles to the economy. We've had COVID, which is raging, with thousands of people being losing jobs, losing their health, and even dying. So we have that kind of issue right there, but we also have something else. We have a very cold snap that's going on, that went on, and also that's hurting retail sales as well, keeping people out of the malls, people shopping. Maybe they're doing it online, but also, if you don't have a job, it's kind of hard to buy stuff. Okay, so this number may be a little optimistic and maybe weaker. I'm expecting this number to actually be lower than forecast, because this is a big jump, negative 0.7 to 0.7. If we miss on that number, okay, but let's say they're right. Let's say the forecasters are completely right. They're right, and if they are right, then we should see the euro go up, the pound go up. We would see this number higher. We see the stock markets go up. However, if this number misses just a little bit, we could see a sell-off in the stock markets, and also a sell-off in the risk, we call risk on currencies, Australian dollar, pound, the pound, and also the New Zealand dollar, Australian dollar, Canadian dollar. Okay, so that would mean that the dollar is set up for a big rebound. Okay, so I would look for this number to come in lower than 0.7%. Okay, so I'm second guessing the analyst here, and I would actually look to get long the US dollar in this case, given all the, we have the attack of the mutants. We have mutant coronavirus, not just coronavirus, but mutants. Okay, so so it's and also the vaccines may not be effective by those, but no, the vaccines may not fight those. So there's we don't, and also people losing their jobs due to holidays and things like that has happened. Remember, this is backward looking. It's looking at January's number. Okay, so let's go ahead and take a look at the charts. Okay, so again, my market heat map is very helpful for that. We can look at the charts, and I want to look at the so we're going to go to our tools here, and we're going to go to the US dollar index in charts. So we go to charts, and we can look at the we can look at the euro, right? But I want to look at the US dollar index, and that's, we can go US dollar, which is the Dow Jones FXCM US dollar index, and it's an arrangement of currencies versus the US dollar, and we can see that we have a nice bit of support here in the US dollar right in here. Okay, so it trades like the DXY. You can look at the DXY. They have the similar chart pattern as well, right? I like this US dollar index because it has an exposure to Asia as well as exposure to Europe as well. The DXY actually it's composed mostly of European currencies, so it is not really representative of what's going on globally, but you can still use it as a proxy. They're going to come, and we're going to go end of day, right? DXY end of day. DXY, we look the end of day. Okay, right. So the end of day, we can see we've gotten, again, a bit of support, that 90.35 area as well, and we're rebounding off of a low here at the 89.16 area. So we have support, and then we have multiple, 4 days of support here, right here. I'm gonna go ahead and zoom in on that. That in here like that. So we've got a number of like support areas here, and then we can see that we can draw a trend line across this area here as well. And so we were poised for a breakout, either a breakout in the dollar index above 90.50, which would take us maybe back up to like 91.62, the high from February 22nd. Okay, so we can do that, and we can also go down, and if we break 90.26, if the number is better than expected, we could see maybe a further test down to 90, the 90, the figure, the 90.00 area. Okay, so this is dollar index. Now we're going to flip it around because the euro is the anti-dollar, and we can actually take a look at the euro, right? So let's go to EURUSD. We'll look at our daily chart, and you can see that it's flipped, where we were kind of going a bit higher highs and higher lows, but we have a high and a lower high, right? And we're like turning over at this whole number round number. The 1.220 area acted as a bit of resistance right there. We have a bit of resistance here in the whole number round number. We didn't quite get there, and actually we got maybe a little bit above the 2150, the 1.2150 area. We could not break that, and we're seeing some resistance. So, you know, and my feeling about some of the fundamentals are that, you know, people have access to some of these numbers beforehand. They actually paid to get access to some of these economic numbers before we do so. So I'm thinking that even technically we are going to see, you know, that number coming in a little bit softer will give the US dollar some strength against the euro, and we can see a move maybe back down to 2054. Okay, so that's we can look for a move through that. We can see a move here, right down to support. However, if the news is much better than expected, then we look for a break of 2177 or so, and that would give us a move maybe back to the old highs we had back at the beginning of the year, near this resistance zone, the 21.2348 area. Okay, so those are our two areas that we want to look at, and we can trade the euro dollar, euro versus US dollar, also known as fiber. Want to get some more fiber in your diet? Okay, or you can look at dollar CAD, and again the opposite. If the number is soft, if we see that number come in below 0.7, maybe it's still negative, then we can see the dollar CAD actually benefit. USD CAD, our neighbor to the north, and you can see like all kinds of support, which just kind of looks like the US dollar index I was showing you previously. The US dollar index bouncing around a support 1.2612 was support that we had back in January, and then we have a trend line coming in. We were near trend line resistance at 1.2694, and that number could give us the surge we need to challenge the 1.2757 area, and ultimately the 128 handle. Okay, so that's my wrap up. That's what I'm looking at, and if you would like to find out more, I wrote a good piece, a good blog on our homepage, Elite Traders University. You go to Elite Traders University, and you can actually take a look, scroll down to the bottom, and we have some blog posts which will show you about the fundamentals and give you a little bit more. In fact, the articles here, how to trade the U.S. retail sales number, if you missed it or need it in written form. There's some bullet points and takeaways as well, and some charts and graphs, and also there's some offers for for a free ebook and also our masterclass. So I look forward to sharing with you more about fundamentals and how you can use them in this market. I know that right now the currency market, the volatility is really low right now, but if you use these news events to as a catalyst, they could possibly give you the opportunities that you're looking for in the markets. All right, and if you need further training or mentorship, also check us out at EliteTradersUniversity.com. Talk to you soon. It's Greg McLeod. Happy pipping.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!